What if I told you the real path to becoming a millionaire isn't flashy, isn't viral, isn't exciting, and definitely isn't trending on your social media feed right now? What if the secret to financial freedom was actually boring? Stay with me until the end of this video, because what I'm about to show you will completely rewire how you think about wealth, success, and long-term money building, and most people ignore it. Right now, the internet is screaming at you. Crypto pumps, AI stock picks, day trading screenshots, overnight success stories, viral side hustles promising 6 figures in 30 days. It feels like if you're not moving fast, you're falling behind. If you're not chasing the next big thing, you're missing out. If your money isn't multiplying overnight, you're doing it wrong. But here's the uncomfortable truth. While everyone is refreshing charts, while everyone is chasing the next trend, while everyone is looking for the shortcut, the truly wealthy are doing something incredibly unexciting. They are repeating small, consistent financial habits over and over, year after year, decade after decade, and that's why they win. Let me ask you something honestly. Have you ever watched someone go viral with money? A trader who made $100,000 in a week? A YouTuber who exploded overnight? An investor who caught the perfect stock? And deep down you wondered, why not me? You work hard, you save, you invest, but it feels slow. It feels invisible. It feels like you're standing still while everyone else is sprinting past you. If that's you, you're not alone. We've been conditioned to believe that speed equals success, that attention equals wealth, that viral equals victory. But here's what history proves again and again. Viral success fades. Consistency compounds. The millionaire next door isn't loud. He isn't trending. He isn't flexing on social media. He's automating investments. He's maxing retirement accounts. He's reinvesting dividends. He's increasing income slowly. He's controlling lifestyle inflation. He's doing the same boring things every month. And because of that, he becomes unstoppable. In this video, we're going to break down why slow and steady beats viral every time, why consistent investing destroys speculative hype, why automation is more powerful than motivation, why boring habits build real financial independence, and how you can adopt the millionaire consistency model, even if you're starting small. But you must stay until the end of this video, because the final framework I'll show you will reveal exactly how the boring millionaire structures their money so that wealth grows automatically, without needing luck, hype, or overnight wins. This is not about getting rich fast. This is about getting rich for real. If you're tired of chasing trends, if you're tired of feeling behind, if you're tired of wondering why your hard work isn't exploding yet, then this might be the most important financial lesson you to hear this year. Let's talk about why boring wins. Let's start with something uncomfortable. Viral wealth looks powerful, but it is rarely durable. The internet has distorted our perception of success. We see highlight reels, not balance sheets. We see wins, not risk exposure. We see screenshots, not long-term sustainability. And because of that, our brains begin to believe that explosive growth is normal. But statistically, it's not. The financial world operates on probabilities, and probability does not reward hype, it rewards repetition. When someone makes money quickly, 3 things are usually true. The gain is concentrated. The risk was elevated. The outcome is unlikely to repeat consistently. Now here's where most people misunderstand the game. They don't see survivorship bias. They see the one investor who made 10 times. They don't see the thousands who lost quietly. They see the entrepreneur who scaled overnight. They don't see the hundreds who burned capital trying. Viral success is visible. Consistency is invisible. And visibility distorts perception. Let's talk numbers. If someone doubles their money in 1 month, that sounds impressive. But if they lose half the next month, they're back where they started. High volatility creates emotional highs and lows, but not necessarily net growth. The boring millionaire understands something critical. Avoiding big losses matters more than chasing big wins, because compounding is fragile. One large drawdown resets progress. This is why long-term investors focus on risk management, asset diversification, steady reinvestment, dollar cost averaging, consistent capital deployment. These are not flashy words. They don't trend, they don't go viral, but they build durable wealth. Now here's the deeper illusion. Viral wealth feels fast, but true wealth is measured over decades. A single good year does not create financial independence. 10 disciplined years might. 20 consistent years almost certainly will. The problem is that consistency doesn't stimulate dopamine. It doesn't excite. It doesn't create a rush. And humans are wired to chase stimulation. This is why speculation feels attractive. It feels like action, but action is not the same as progress. Activity is not the same as advancement. And financial maturity requires separating those two. Here's something powerful. The wealthiest individuals in the world are not known for volatility. They are known for durability. They protect downside aggressively. They scale upside gradually. They optimize systems, not spikes. And when you look at long-term wealth data, something becomes clear. Most millionaires did not get rich from one explosive event. They built wealth through employer-sponsored retirement accounts, business equity compounded over time, real estate appreciation, dividend reinvestment, incremental income increases. Nothing viral, just structured repetition. So why does viral wealth keep dominating our attention? Because it sells, because it's emotional, because it feels accessible. It gives the illusion that anyone can jump levels instantly. But here's the cost of chasing viral success: inconsistency, emotional decision-making, frequent strategy shifts, overexposure to risk, loss of compounding momentum, and momentum is everything. The boring millionaire protects momentum. They don't need excitement. They need trajectory. They don't ask, how fast can this grow? They ask, how reliably can this grow? That one question changes behavior, because reliability builds confidence. Confidence builds discipline. Discipline builds repetition. Repetition builds compounding. And compounding builds wealth. Now think about your own financial habits. Are they optimized for attention or optimized for durability? Are you trying to catch waves or build current? That distinction determines outcomes. And once you understand that viral wealth is often an illusion, you can begin to see why slow and steady doesn't just work, it dominates. But here's the part that most people still struggle with. If slow and steady wins, why does it feel so hard to stay consistent? Why does boredom feel like stagnation? Why does patience feel like losing? That's what we're about to unpack next. Here's the real challenge. If consistency builds wealth, why does it feel so unrewarding in the moment? Because your brain is wired for novelty. New opportunities trigger dopamine. New investments feel exciting. New strategies feel intelligent. But repetition feels stagnant. And that's exactly why most people abandon the very behaviors that would have made them wealthy. The boring millionaire understands something powerful. Boredom is not a warning sign. It's a stability signal. When your financial habits feel repetitive, predictable, and uneventful, it often means they are working. Think about automation. Automatic investing every month. Automatic retirement contributions. Automatic debt payments. Automatic reinvestment of dividends. There's nothing dramatic about it. No applause. No social media post. No viral moment. Just execution, month after month, year after year. Now here's the psychological trap. Because it feels slow, people assume it isn't effective. Because it isn't loud, they assume it isn't powerful. Because it doesn't spike, they assume it isn't growing. But compounding is quiet. Compounding does not announce itself in year 1. It barely whispers in year 2. By year 5, it's noticeable. By year 10, it's impressive. By year 20, it's transformative. But most people quit in year 3, not because it failed, but because it felt boring. And boredom is misinterpreted as lack of progress. The boring millionaire reframes this. They measure trajectory, not excitement. They care about net worth trend, investment consistency, income stability, asset growth rate. Not daily fluctuations, not weekly noise, not headlines. Noise is designed to distract. Financial news thrives on urgency. Market crash. Next big stock. Hidden opportunity. But urgency destroys patience. And patience is required for compounding. The people who win long-term are not reacting to every headline. They are executing predetermined systems. They invest regardless of mood. They save regardless of hype. They rebalance regardless of trend. And this creates something incredibly powerful. Financial predictability. Predictability reduces stress. Reduced stress improves decision-making. Improved decision-making prevents impulsive mistakes. Mistake prevention protects capital. Capital protection accelerates compounding. This is the silent advantage. Now consider something subtle. The wealthy often look average financially in the early years. They drive reasonable cars. They live below their means. They avoid lifestyle inflation. They prioritize investing over impressing. From the outside, it doesn't look extraordinary, but internally, systems are stacking. Assets are building. Momentum is forming. And while others are chasing fast money, the boring millionaire is building financial gravity. Gravity doesn't explode, it accumulates. And once it's strong enough, it pulls opportunities toward you. When your capital base grows, options expand. When options expand, leverage increases. When leverage increases, growth accelerates. But it all starts with repetition. Consistency is not glamorous. It is not Instagrammable. It is not headline-worthy. It is mechanical. And mechanical systems outperform emotional decisions. This is why the boring approach wins the wealth race, because it removes volatility from behavior. And volatility in behavior is often more destructive than volatility in markets. You don't need perfect timing. You need persistent action. You don't need explosive returns. You need uninterrupted compounding. And uninterrupted compounding requires discipline that feels unexciting in the short term, but extraordinary in the long term. The difference between the person chasing viral success and the person building steady wealth isn't intelligence, it's endurance. Endurance beats excitement every time. The architecture of the boring millionaire. Consistency alone is not enough. It must be structured. The boring millionaire does not rely on motivation, they rely on design, because motivation fluctuates. Design endures. Their wealth is not the result of heroic financial decisions. It is the result of automated financial architecture. Let's break that down. Most people treat investing like an activity. Millionaires treat investing like infrastructure. Infrastructure runs whether you feel like participating or not. Automatic retirement contributions, automatic brokerage investments, automatic business reinvestment, automatic debt reduction schedules, automatic savings rate increases as income rises. Notice the pattern. Systems remove the need for daily discipline, and when discipline is required less frequently, consistency increases. This is why automation is one of the most underrated wealth tools in existence. It eliminates negotiation. There's no monthly debate, no emotional weighing, no impulse override. Money moves before you touch it. And that single structural shift creates separation. Now look at the difference in behavior. The average person waits until the end of the month to invest what's left. The boring millionaire invests at the beginning of the month. The average person increases spending when income rises. The boring millionaire increases investment allocation first. The average person reacts to market volatility. The boring millionaire rebalances strategically. These decisions are small in isolation, but repeated over decades, they are decisive. Let's talk about risk. Viral wealth seekers often concentrate risk. One stock, one coin, one big bet, one breakout opportunity. It feels powerful, but concentration magnifies fragility. The boring millionaire diversifies deliberately, across asset classes, across industries, across income streams, across time horizons. Diversification may reduce explosive upside, but it dramatically increases survival probability. And survival probability is everything, because compounding only works if you remain in the game. The wealth race is not about speed, It is about staying power. Now consider income growth. Many assume steady investors are passive. They are not. They pursue income expansion strategically, skill acquisition, career advancement, business equity, negotiation leverage. But they scale income without scaling lifestyle proportionally. That difference accelerates capital accumulation, and accumulated capital becomes leverage. Leverage creates opportunity. Opportunity compounds. Here's another defining trait. They measure progress annually, not daily. Daily movements are noise. Annual trend lines are signal. Signal drives strategy. Noise drives reaction. Reaction destroys stability. Stability protects growth. Now zoom out. After 10 years of consistent investing, moderate lifestyle control, and steady income expansion, the boring millionaire looks different. Not flashy, not viral, but resilient. Their capital base produces returns independent of effort. Their lifestyle is supported by assets, not just labor. Their decisions are calm because their systems are strong. And systems create durability. Durability builds wealth that lasts. This is not a sprint. This is structural engineering. You are not chasing a moment. You are constructing a machine. And once that machine is built, it runs quietly, predictably, powerfully. That is the architecture of steady wealth. Not exciting, but unstoppable. There's something most people underestimate about wealth. It doesn't grow in bursts, it grows in layers, layer by layer, year by year. And the boring millionaire understands something incredibly powerful. Small improvements, repeated consistently, outperform big moves made occasionally. Let's talk about incremental gains. If you improve your savings rate by 1% this year, then increase your income by 5% next year, then reduce unnecessary expenses by another 2%, then increase investment contributions slightly. You won't feel the impact immediately, but over a decade, it compounds. Now compare that to someone chasing explosive growth. They make a large speculative investment, they win once, they lose once, they reset emotionally, they change strategy, they chase again. That volatility interrupts compounding. Incremental wealth builders don't interrupt momentum, they enhance it gradually, and gradual enhancement compounds in ways that dramatic shifts cannot. Here's a simple example. If you invest $1,000 consistently every month at a steady return, you may not notice much change in the first few years, but the growth curve bends upward over time. It's slow at first, then faster, then significantly faster. Compounding rewards patience, but it punishes inconsistency. This is why avoiding major losses is more important than chasing major wins. A 50% loss requires a 100% gain just to break even. That math is unforgiving. The boring millionaire focuses on minimizing drawdowns, not maximizing hype, because protecting capital preserves compounding, and preserved compounding creates acceleration. Another key principle is habit stacking. Wealth builders stack small habits, automatic contributions, annual contribution increases, dividend reinvestment, strategic rebalancing, incremental skill development, incremental income negotiation. Each individual improvement feels minor, but combined, they form momentum. And momentum is what separates average earners from long-term wealth builders. Here's something even deeper. Incremental growth builds confidence. When progress is steady, anxiety decreases. When anxiety decreases, decision-making improves. When decision-making improves, mistakes decrease. When mistakes decrease, capital remains intact. Capital intact means compounding continues uninterrupted. This cycle strengthens itself. Small gains feed stability. Stability feeds clarity. Clarity feeds better allocation. Better allocation feeds stronger gains. That's the machine. Now contrast this with chasing trends. Trend chasing creates spikes. Spikes create emotion. Emotion creates overexposure. Overexposure creates risk. Risk creates volatility. Volatility disrupts consistency. And disrupted consistency breaks compounding. The difference between slow wealth and volatile wealth is not intelligence. It's tolerance for gradual progress. The boring millionaire does not need dramatic returns. They need reliable ones. They do not require massive wins. They require uninterrupted momentum, and that momentum is built through incremental gains. The powerful truth is this: you don't need extraordinary results. You need ordinary results executed extraordinarily well. Small increases in contribution, small increases in knowledge, small increases in discipline, small increases in patience. Over time, small becomes unstoppable. That's the math most people ignore, and that's why steady wealth consistently outperforms viral success. The long game advantage: time is the ultimate wealth multiplier. There is one advantage the boring millionaire understands better than almost anyone else. Time is not just a factor in wealth building. Time is the engine. Most people underestimate time because they overestimate speed. They want visible progress quickly. They want confirmation that it's working. They want reassurance in months. But wealth measures itself in years and multiplies in decades. The true power of slow and steady is not consistency alone. It is consistency combined with duration. Duration changes everything. Compounding over 1 year is modest. Compounding over 5 years is noticeable. Compounding over 20 years is life-changing. And compounding over 30 years is generational. Now here's the trap. Because compounding accelerates later, it feels unimpressive early. In the beginning, your contributions drive growth. Later, growth drives growth. And that shift is invisible until it becomes undeniable. The boring millionaire understands this curve. They are patient in the early phase. They don't panic when progress feels small. They know the real acceleration happens after discipline has been maintained long enough. This is why they protect time in the market, not timing the market. Time in the market allows compounding to work uninterrupted. Timing the market introduces gaps. Gaps interrupt momentum. Momentum is fragile in the early years, but once momentum builds, it becomes powerful. Now let's talk about another aspect of time: delayed gratification. This is one of the most underestimated financial advantages. When you delay lifestyle upgrades, when you resist inflation in expenses, when you prioritize asset growth over appearance, you are buying future optionality. Optionality means freedom. Freedom to reduce work, freedom to pivot careers, freedom to invest in opportunities, freedom to absorb shocks. That freedom compounds just like money does. Now consider something deeper. When you begin investing early, even small amounts, you are not just accumulating capital. You are training your behavior. Behavior repeated over decades becomes identity. Identity becomes automatic action. Automatic action becomes wealth. The earlier you start, the less pressure you feel later, because time absorbs mistakes. Time smooths volatility. Time magnifies consistency. But when people start late and attempt to compensate with aggression, they expose themselves to unnecessary risk. They compress what should have been decades into a few years, and compression creates fragility. The boring millionaire avoids compression. They stretch the timeline. They think long-term by default, not because it's exciting, but because it is mathematically superior. Now here's a powerful mental model. Imagine two individuals. One invests aggressively for short bursts but inconsistently. The other invests moderately but uninterrupted for 20 years. The second investor often ends up ahead, not because of brilliance, but because of endurance. Endurance multiplies returns, consistency multiplies endurance, and time multiplies consistency. This is the triple advantage, and once you understand this, something changes. You stop comparing your year 1 to someone else's year 15. You stop measuring progress in months. You start measuring trajectory in decades. That shift reduces anxiety. Reduced anxiety reduces impulsive decisions. Reduced impulsivity preserves capital. Preserved capital compounds. That's how time becomes your ally instead of your pressure. The boring millionaire wins because they cooperate with time. They don't fight it. They don't rush it. They align with it. And when alignment happens, wealth becomes predictable, not flashy, not explosive, predictable. And predictable growth, sustained long enough, becomes extraordinary. Let's bring this full circle. If you've been feeling like you're behind, if you've been watching people chase trends and wondering why your progress feels slow, if you've questioned whether your steady investing is enough, you need to hear this clearly. You're not behind, you're building. There's a massive difference between being slow and being strategic. The world celebrates speed, but wealth rewards structure. The internet celebrates spikes, but financial independence rewards stability. When you choose consistency over chaos, when you choose discipline over dopamine, when you choose long-term positioning over short-term validation, you are not falling behind. You are separating yourself. Because here's the truth most people won't admit. The flashy wins often fade. The steady builders endure, and endurance is what wins the wealth race. You don't need to go viral. You don't need a lucky trade. You don't need to hit it 10 times overnight. You need uninterrupted momentum. You need systems that run whether you're motivated or not. You need patience strong enough to outlast noise. That's the identity shift. From trend chaser to capital builder, from reactive investor to disciplined allocator, from impatient observer to long-term architect. And once you adopt that identity, everything changes. You stop comparing your timeline. You stop reacting to headlines. You stop feeling pressured to catch up because you understand something powerful. Wealth is not a race to be first, it's a race to stay consistent. And consistency compounds. If this message resonated with you, if it shifted your thinking, if it helped you see your progress differently, then you're exactly who this channel is for. Financial Awaken with Aaron is about financial education that builds real foundations. We talk about wealth-building strategies that actually scale, money mindset shifts that create discipline, long-term financial independence, and helping individuals and families make smarter financial decisions, not emotional ones. If you're serious about building wealth the steady way, subscribe to Financial Awaken with Aaron and hit the notification button so you don't miss the next breakdown. Because we're not here for hype. We're here for structure. We're not here for viral spikes. We're here for sustainable growth. And if you stay consistent, if you stay disciplined, if you stay patient, you won't just build wealth, you'll build freedom. I'll see you in the next video. Let's keep building.